Warren Buffett, he is the world's greatest investor, but no investor is perfect. So looking at his portfolio right now, what are the absolute worst stocks that he owns? What can we learn from it? And is there a company that is actually worth buying here? Let's go ahead and break it down. Now, I'm not going to go into Warren Buffett's history, but I will tell you this. Every year, he does have to file, actually quarterly, so 4 times a year, he has to tell us exactly what he bought, what he sold. They call this the 13F. The last one that we got, the most recent one that we have at the time that we're doing this video was December of 2023. So taking that, here's what I did. I ranked all the stocks. I looked at their performance from the time that he bought them and also over the last 6 months and over the last year to give us a gauge on whether we should consider adding it to our watch list and possibly investing in. So here's the thing. We're just going to start from the bottom and work our way up. Number 1 on the list is KHC, that is Kraft Heinz. This company merged together in 2015. So we're looking at 2015 to now. If I'm looking at that, it's a 53% loss. A 53% loss for Kraft Heinz. Clearly not the best investment. Now, this is not to beat up on him. Now, obviously, again, $100 billion or whatever his net worth is right now. But this was a major mistake. And there are a few things that we can pull from this. But also, on the performance side of things, it is up 7% in the last 6 months. That's fine. Now, given context, right, in the last 6 months, the entire stock market is up at least double that, probably, right? At least double digits. And then it's down 10% over last year. Now, he has come out and said himself that he paid too much for Kraft. And I think that is basically what this is coming down to. When I look at this reminds me a lot of me buying Smuckers, the mistake that I made, right? I did all the analysis, thought the company was great, but it actually did a surprise merger. Now, I say a surprise merger because I am not an insider trader. And I don't work at Smuckers, so I didn't know they were going to do a merger with Hostess, that's the maker of Twinkies, and that tanked the stock at that point in time. Now, he actually created this merger himself, right? And it just doesn't seem to have worked out at this point in time. But we know how Warren Buffett is. He's going to hold. He's going to hold for decades if need be. So right now he's getting close to the 9-year mark. We'll see where it's going to be at year 10, assuming he is going to continue to hold that stock. Would I buy it? Do I see any value in it? No, I don't. Okay, but there is one that I do of this list. Number 2 here is Paramount. Now, I sort of feel bad about Paramount. It's hard to feel bad for somebody who's, made billions and billions of dollars, but we were all in this boat because he bought this stock in 2022, and almost anybody who bought a stock in 2022 likely lost money. All right, that's just the market was down, okay, close to like 18-19% that year. It happens, okay. So I think that's the lesson here too, is hey, you might start off on the wrong foot, right? And it might not be your fault, but I'm looking at Paramount, it's down 74%. 74% from the time he bought it in 2022. I'm sorry, I can't stick with it. That's just me. I have also made mistakes. I didn't want to stick with Netflix when it took a nosedive, and look at it now. Okay, so maybe he knows something I don't. Also, it's down 24% in the last 6 months and down 54% in the last year. So it's really not moving in the right direction. In my defense, not that I need to really have a defense because I'm not the one who owns Paramount, but I think obviously, right, I think Netflix has a lot more power, a lot more cachet, a lot more branding, a lot more history with it that has the ability to recover. I would argue Disney Plus falls into that category too, versus Paramount. Paramount is like what, the 3rd or 4th tier when you're talking about streaming. If I'm just to do this from the top of my head, I got Disney Plus, I got Netflix, Hulu is probably a rung under that. You got YouTube TV in there somewhere, and then Paramount and Peacock are like at the bottom, right? They're going to do whatever they're going to do, but they also had a lot of turmoil within the CEO ranks about who is going to continue to take over the company, how they're going to continue producing movies, what they're going to do with the streaming service, and everything in between. I will say the positive note here is they did do a partnership with Walmart's subscription program. We did talk about that when it occurred. I talked a lot more about it when I was comparing it to Target and Target's program, which at the time did not exist when it comes to streaming services and all that type of thing. I'm not really excited about Paramount and their future. This is one I would absolutely get rid of, like Kraft Heinz. Now, being down 53% for 9 years is not acceptable for me. But if I'm just looking at the recent history, I'd be okay holding it. Okay, I wouldn't be excited, Right? I wouldn't buy more if I had Kraft. But Paramount something I would absolutely cut my losses at this point in time. But again, he got it in 2022. It is still relatively young. Could it improve? Oh, it's possible. It's definitely possible. I just don't know if it's likely. And I don't know how long it is going to take for you to recover a 74% loss for it to actually be worth it. But that's just my view. I'd love to hear your thoughts about Paramount, or if you even own a stock that is in this realm right now. Number 3 here is Snowflake. Now, Snowflake is interesting, and I actually follow Warren Buffett on this. Okay, so when the company went public, I think it was September or October of 2021. It's the first time that Warren Buffett ever bought an IPO. I have had a long history of not buying IPOs. You can go check my Twitter feed, type in IPO and my name, and scroll back as far as you want, and you'll see me saying I'm not buying IPOs. This was the one time I broke a rule. We broke that rule. We did a video about it, and I got in because Warren Buffett got in. I got in because Microsoft had actually backed it too, and it was only $300. Okay, let's be clear. It wasn't millions of dollars or even $1,000 for me, but that was one of the reasons I got into it. Now, there are a data software or a data management company, cloud data management company, want to be more exact, but it's down 13% from its IPO. Now, compared to everything else on this list, down 74, down 53, a 13% loss is fine. It's only been 2.5, almost 3 years. By the end of this year, it'll be about 3 years. So it's relatively new. But here's the thing. This is the stock of the 3. Snowflake is the stock I have most confidence in moving forward, and that is because not only is it up just 12% over the last 6 months and up 25% over the last year, it passed what we call the golden cross, and really started to gain momentum and really started to take off almost like a hockey stick starting in the fall of last year. So if you're looking at how long a stock can run and whether it's really going to be an extended rally where the stock is going to take off for a while, not just like an overnight bump, I think this is the opportunity. This is the time, because hopping in after a 12% gain compared to what a lot of other tech stocks have done, this is still a discount, right? This is still a value. And I think right now is the absolute perfect time to buy, as opposed to when Warren Buffett bought and when I bought, right? We still waiting on our returns at this point in time. But I think right now is that opportunity. What I also like about it is it's not a chip company. I don't have no beef around chip stocks. I think y'all know that, okay? But because it's in the cloud space and the data management space, it's a little removed from it. So if the chip stocks start to taper off, or people feel like, hey, I'm taking my money off the table there, and that starts to come down a bit, don't know if that's going to happen or not, you're a little bit diversified. You're still in tech, but you're in a different category that can help to extend that rally and help to extend your profits, hopefully, if things go in that direction. So I would absolutely take a look at that. Now, the other thing that we learned about Warren Buffett is this. He sold about $20 billion in stocks. Absolutely got rid of some stuff, and we actually covered that on the channel. So now that you know what the worst investments are, you actually want to take a look at some of the stuff that he sold, you can check out that video right here.